Hello, welcome to CDH's YouTube channel. My name is Ko Fujimoto. Today's topic is about dream cross-border life, Japan and the US, smart tax planning ideas for American citizens. If you want to enjoy cross-border lifestyle between Japan and the United States. So let's talk about the life in general in Japan first. As you may know, there are many attractions of time spending in Japan. A lot of people find Japanese food very tasty, extremely low crime rate, low cost of living, and the medical cost and the government subsidized long-term care, very affordable. And the medical care level, I think it's not bad at all. It is good. Now, so to enjoy these benefits, you gotta be careful about the Japan's taxation. Their gift and inheritance tax exemption is they are very painfully low exemption and also a high tax rate. If I only speak about the inheritance tax, if I use the exchange rate of 100 yen equal $1, which is substantially over inflating the value of Japanese yen, but it's easy to give you a number. So if I use that number, the base exemption for the inheritance is $300,000. Now, if I try to use the 134 yen equal $1, this $300,000 becomes probably 220 or 230,000 US dollars. It's extremely low. And if I may, I would add the gift tax exemption, annual exemption per donee is less than $10,000 per year. So it is pain-free, low exemption, and inheritance tax maximum rate is, I think, it's 55%. So with that, and once you become a tax resident of Japan, in general, there are few breaks for the foreigners, but in general, once you become a tax resident of Japan, then the worldwide assets, the transaction of worldwide assets are subject to the taxation for the tax resident. So you don't want to get caught by this system while you enjoy your the cross-border lifestyle. At the same time, life in the United States, substantially higher unified credit. Currently, its amount is $12.92 million, substantially higher than that of Japan. And the unified credit connects the gifting and estate, but Japan doesn't have such a system. Well, let me clarify here. I am a U.S. CPA, and I am not the Japanese CPA. So my presentation about the Japanese taxes, I want you to take it with the qualification that I am not the Japanese tax CPA. So, but the address of my qualifications, the people travel to different countries, spend the time, and it's a fact, it's a reality that many people are enjoying cross-border lifestyles. So someone has to at least give some ideas to those who wants to enjoy this lifestyle. So anyway, I kind of sidestepped. But the U.S. side is once you become a U.S. tax resident by a substantial presence test or a green card test, or if you're a U.S. citizen, you are U.S. tax resident, no matter what. But once you become a U.S. tax resident, your worldwide income is subject to taxation in the United States, and also gifting and uh, estate transaction include your worldwide asset. And I should point out that US's income tax rate for the people who earns a lot of money uh, is I think is generally lower, probably significantly lower uh, that of Japanese income tax rate for those who earns um, let's say $100,000 or more, maybe $300,000 more. The Japan's tax rate, I think, is higher. So by presenting you the life in Japan and taxation in Japan and taxation in the U.S. and uh, and I don't have to talk about the life in the United States, I think. But so with this, let's try to plan out what you can do. First of all, it is obvious that you need to maintain a non-tax resident status in Japan to avoid its worldwide taxation. And even if you become a resident, tax resident of Japan, foreigners get a break for the first 5 years of your stay. It's called Hi Eijusha. Hi Eijusha. Hi means non in Japanese. Hi Eijusha status to no tax on only foreign source income as long as you don't bring them in. They don't tax you for the first 5 years of your foreign source, meaning non-Japanese source income, as long as you don't bring them in. So there's a one break here for the foreigners, and another break for this break is there in gift and inheritance tax law in Japan. So if you have a certain residency type, I think such as business, arts, government, those residency type. I mean, in English we use the term visa, but I probably I should let me use the word residency type permit that enables you to stay for a certain period in Japan. There's a break. The break is once you are in such a residency types, then your inheritance tax only covers your assets in Japan. Um, However, at the same time, I think if you go and live in Japan and with a residency type such as spouse of a Japanese citizen, this break is not available. So if you pass away, then worldwide assets will be taxed with the low exemption and high tax rate. So, number one point that I listed here, uh, this one, is I think it has a lot to do with your duration of time you spend in Japan, what do you have in Japan, and it's a subjective, I think, subjective rule, facts and circumstances type of decision. And um, if you're foreigners, I think this break is there for all the foreigners for the first 5 years. And also, number three is depending on the types of your residency, then gift and inheritance tax, you get breaks. So understanding that these breaks and these uh, limitations, I hope you enjoy the goodness of Japan while being careful not to become a resident for the tax purposes of Japan. And people ages, right? People age, and everyone gets older, and you would probably reach a stage where, okay, I have had enough troubles, enjoyed enough. I'm gonna settle down, and I'm gonna live in one place forever. And in this case, let's assume you're gonna live in Japan. But before you do, I would say you should really take advantage of your unified credit and plan out or transfer out from you your assets while you enjoy the US unified credit, right? And if you are non-resident non-tax resident of Japan, then the movement outside of Japan of your assets, Japanese government would not be able to tax you. And move to Japan and spend the rest of your life. It's totally up to you. If you renounce your US citizenship, it takes time to obtain Japanese citizenship, just like it takes time for anyone to obtain US citizenship. I think it's similar. But if you're aware of those limitations, then you can live there and renounce your US citizenship or maintain your US citizenship, and you still have to file US tax returns, but enjoy the life in Japan. So, precautions. Number one precautions is the the key point is, make sure you are not becoming accidental the tax resident of Japan. Continue to receive advice from excellent tax accountants in Japan, not me, not me. The licensed Japanese tax accountant get advice continuously, and please, be ready to spend money and do not make a amateur judgment because the price you pay would be very high. If you plan to dispose of your assets, I would say give ample time. 3 years is minimum. And you plan out things that you want to do 3 years or 4 years ahead, and do transfer out with the advice from the U.S. experts, such as our firm CDH. If you decide to renounce your U.S. citizenship, you will be subject to the risk of the U.S. exit tax, depending on your condition. So you must be aware of what's involved in the exit tax. And now, by the way, exit tax applies to the people who abandon the green card too. And then I said it takes time to obtain Japanese citizenship. 3 years is a minimum. I think for US, once you obtain your green card, you must wait 5 years to apply for the US citizenship, unless you get married to a US citizen. In that case, it would be 3 years, I think. I think that's probably it. But let me add one more point because the I kept using the word tax resident of Japan. Tax resident of Japan is, I think it's similar, concept is similar to US domicile in the US inheritance and gift taxation. It's facts and circumstances basis, and it is not equal to the residency card that you obtain from the Japanese municipal government, city or village, or and then there's a the KU section. You go there and you said, I'm gonna live in this town, give me a residency card, and then this residency card would get you the bank accounts and national health insurance and so forth. However, this residency card and the tax resident of Japan are two different concepts, I think. So please don't get confused. And any society is changing, and Japanese society too. It gets more digitized, and the information exchange is happening. You should really try to work with the competent bilingual professionals to help you navigate your time spent in Japan. I hope my video or our video would be a help of you. So this is our disclaimer of the video, and this is our ending page, and we have digital products of mostly seminar recording, and you can pay to rent these seminars of different subject. So, and we have a book in Amazon written in Japanese for the taxation, mostly a U.S. taxation for the Japanese living in the United States. So thank you very much for watching, and have a good day.